How do I compare my portfolio to a benchmark? Imagine trying to see how well your investments are doing without a clear yardstick. Comparing your portfolio to a benchmark helps you understand if you're on the right track. It's like checking your progress against a standard or a goal. First, you need to know what a benchmark is. A benchmark is a specific market index or a group of investments that representing a segment of the market. For example, the S&P 500 tracks large U.S. companies, the MSCI World Index covers global stocks, and the Bloomberg U.S. Aggregate Bond Index measures U.S. bonds. These serve as reference points for your investments. Next, find a benchmark that matches your portfolio's style. If most of your investments are in U.S. large-cap stocks, the S&P 500 is a good choice. If you have a mix of international stocks and bonds, you might combine indexes like the MSCI World and the Bloomberg Bond Index. Matching your portfolio's characteristics ensures a fair comparison. Once you've picked a benchmark, gather your portfolio's performance data over the same period. This includes total return, which combines price changes and income from dividends or interest. Many online platforms and apps can automatically calculate your total return and compare it to your chosen benchmark. Now look at the numbers. If your portfolio's return is higher than the benchmark, you're outperforming. If it's lower, then your investments are underperforming. But don't just focus on raw numbers. Consider the level of risk you took to achieve those returns. A portfolio that earns more but with much higher risk might not be better than one with slightly lower returns but less risk. Tools like the Sharpe ratio can help you compare risk-adjusted performance. But for simple comparisons, look at the overall trend. For portfolios with different types of assets, you might need a custom benchmark. This involves blending indexes to match your asset mix. For example, if your portfolio is 60% stocks and 40% bonds, your custom benchmark could be 60% S&P 500 and 40% Bloomberg Bond Index. Many investment platforms allow you to create these custom benchmarks easily. Peer group benchmarks are another option. These compare your fund's performance to similar funds or investments. This is helpful if you're investing in mutual funds or exchange-traded funds and want to see how your manager is doing compared to others. When reviewing your comparison, remember that short-term differences are normal. Focus on long-term trends to get a clearer picture. Also, factor in costs and taxes, as they can influence your net returns but aren't reflected in benchmark figures. To keep track, log into your investment account or use a portfolio tracking tool. Regularly review your performance, whether quarterly or annually. Use this information to decide if your current strategy needs adjustments or if you should consult a financial advisor. In the end, comparing your portfolio to a benchmark is a straightforward way to see how well your investments are doing. Pick a matching benchmark, compare total returns over the same period, and consider risk. Doing this regularly helps you stay aligned with your financial goals and make smarter investment choices.